Hello everybody, Brian here, quantlabs.net. Today is the 28th of April, 10 to 2, my time, East Standard Time. Alright, so here we have an article from usagold.com. Article is Gold Level as Sharp Dollar Advance Continues. So here we are talking about the US dollar performing, and gold to me is just not the place to be. When you have what it says here is that the Japanese, Chinese, European central banks are advertising looser monetary policies while the Federal Reserve signals polar opposite. Dollar goes up and then the gold gets weakened. Now, a lot of these articles you got to be very careful of. So again, this is usagold.com article, Gold Level as Sharp Dollar Advance Continues. Subheadline, the last time this happened, markets got very wobbly. Well, if you haven't noticed, to whoever this author is, you haven't noticed that the markets, or at least the U.S., well, globally, the U.S. market's been negative for all year pretty well. And they're now just saying they're wobbly? Man, that's why I don't believe you should really take a lot of stock in these articles. But let me show you what's going on. So here on MotoWave, we've got, now, here's the intraday, or this is, how frequent is this data? Yeah, this looks like it's a daily. Listen, if you're gonna get caught up in what everybody says on YouTube, gold's the place to be. Does that look like, yeah, you want to go from 1900 all the way down to 1800 and hold it? On the daily view, you've had some decent performance, and this went up 1775 to 2050. Again, XAU, or gold in US dollars. So it's moved up. That's obviously because of the war, but it's starting to come off again. And then when you look at silver, still getting crushed. That's the poor man's gold. And then again, same thing, but look at these severe drops. Why the hell would you want to own this stuff? These are, let me just show you maybe the monthly view. Gold is not really, it's like Bitcoin, it's just going nowhere, okay? When you look at January 2010, it moved up because of the financial crisis. But right now, until that kicks in, I mean, look at this volume on bad news. Boom, gold goes up, does nothing to the price, and then it comes back down. Sorry, that's silver. When you look at gold, let's look at the monthly here. Slightly up, pushes up the price, but then it starts to drift. This is the same problem we're having with crypto, namely Bitcoin and Ethereum. This is why my portfolio optimizer just does not pay any attention to this stuff, because what you're doing is you're holding assets that are not performing, giving you extreme volatility, and it's really not hedging. And the reason for a lot of this is just due to the fact of what I call manipulation. So here, let me just repeat here. So the price of gold back in November 2018, 1100 to 2000. So it's moved up long term, which is fine. And that might be fine. But when you look at, let me see here, monthly view, same thing. It's not doing as well. From $12 back in April. So when the pandemic hit, basically, from April 1st to 2010, we had the price here on silver at $14 all the way up to 27. So that's a good run up over short term. But again, when you hit these sideways market conditions, it's just something I wouldn't really pay a lot of attention to. My portfolio optimizer will automatically see that allocation, but right now it's not showing any form of wanting to hold it. But this is where it's really interesting. So once again, we have our daily view here, I believe. Yeah, it looks like it. Now this is gold-silver ratio. The gold-silver ratio is so reliable in terms of what you can learn from historical performance on when things get bad. So when the gold-silver ratio spikes like this from 76 to 82, something's going on. And you're not going to see this in the news. When you read articles with what I just showed you on what usagold.com, That's not smart way of trading, I don't think. You want to watch what metrics like this do. Gold silver ratio is very reliable. I've talked about this many times. So if I showed you the monthly chart, you can clearly see what's been going on. This goes all the way back to 2006. So now this is on Oanda, and I'm gonna eventually make a switch over to interactive brokers for better data. But look how reliable this is. So here's the risk, and this is the overall world global economic risk in the market right there. So back in 2008, it spikes because of that financial crisis, comes back down, which is really good news. And then once you start to see that, again, this is a monthly view, this was the exact time to jump in to see it move up. But here's the problem. You use this as a measuring stick, as a risk to the overall market. And a lot of this moving up since 2000, April, when was this? April 2011 up until this point, January 2020. You can see here how we're now at the same peak of what happened in 2008. And then it just spiked again because of the pandemic, and it's dropped back down. So this again is just showing you the recovery. But guess what? That march now continues. You can see the volume here has been starting to build back into the risk, meaning it's more risk in the global market. And this is where you can tell that the market is globally over the last few months has been turning. Okay, and this metric, gold silver ratio, is really good, and you can see it just move up as things seem to get more desperate, I guess, based upon the size of these moves on each month. So once we get to a level here, back to May 2019, it's just a matter of some sort of catalyst to come along and really push this up. I don't know what those catalysts will be, but you can see here that last 2 months has been building, and it definitely was building in 2016, and it really started to move up in terms of volume, and then it really just took off in 2019, 2018, and then boom. So there's a lot of risk here, and it's very reliable. Anyways, this is just one of those things that I do watch. If you want to be able to preserve your wealth pretty well, what I would recommend is to, let me just see if I can find it right here, quantlabs.net/banking, preserve your wealth, know where to hedge. I just showed you gold's not it. Currencies is right now the better place. You get way better performance, like 3 times, 300 times. Yeah, 3 times, same thing. So if you want to learn how to preserve your wealth and hedge properly, just join here, quantlabs.net/banking, get on my email list, and it'll show you some stuff on how to get around that. That's it. Thanks for watching.